Ondas Inc. is currently trading at $9.73 per share as the market closes out the session on May 4, 2026. Looking at the intraday movement, we saw a fairly sharp decline of 5.72% during regular hours, with the stock sliding from an open of $10.15 down to that $9.73 mark. Even in the after hours, the pressure hasn't completely let up, with the price ticking down slightly further toward the $9.66 level. This kind of volatility is exactly what we have come to expect from ONDS, but there is a massive gap right now between what the retail crowd sees on their Robinhood app and what the institutional players are actually positioning for as we head into the middle of the year. Most people looking at Ondas stock right now see a company that just shed over 5% of its value in a single day and assume the momentum is dead. The reality is that we are witnessing a classic tug of war between short-term dilution fears and long-term contract execution. While the surface-level narrative is focused on a 1.2 billion share plan that has sparked some nervousness about fractional shares and future value, the deeper reality is that Ondas is sitting on a cash pile of nearly $1.5 billion. They aren't just surviving, they are hoarding capital to dominate the autonomous system space. This creates a fascinating tension because the market is pricing ONDS like a struggling startup, yet their balance sheet looks more like a seasoned defense contractor ready to swallow up smaller competitors in the individual brokerage space. If you look at the general belief surrounding this company, the consensus is that it is a high-burn, high-risk play that might not find its footing before the cash runs out. I want to challenge that. When you look at their recent activity on platforms like Interactive Brokers, you see that institutional activity is actually picking up. Why? Because the expectation of continued losses is being met by the reality of massive revenue scaling. We are talking about a company that grew revenue by over 600% last year and is now guiding for at least $375 million in 2026. That is not the profile of a failing business. That is a vertical liftoff. Recent stock movement has been a bit of a roller coaster, swinging between $8.70 and $11.60 over the last few weeks. This range-bound behavior usually indicates that the market is waiting for a specific catalyst to break the stalemate. We saw a lot of volume today, but it was mostly defensive. Traders using SoFi Invest or Fidelity brokerage accounts might be feeling the sting of today's drop, but it is important to look at the sector momentum. The drone and autonomous defense sector is heating up, and Ondas is right at the center of it with their 4M Defense and Aerobotics subsidiaries. Let's talk about what this company actually does because it's easy to get lost in the tickers. Ondas operates through two main pillars, Ondas Autonomous Systems and Ondas Networks. They provide the private wireless solutions that allow high-end autonomous drones and ground robots to communicate securely. Think about it like this. If you're a government or a massive utility company, you can't just use a standard Wi-Fi signal to fly your security drones. You need a private, impenetrable network. That is where Ondas makes its bread. They recently secured a $15.8 million order for a demining program in Israel, which is part of a much larger $60 million potential program. These are the kinds of real-world applications that provide a floor for the stock, regardless of the daily swings we see on the Fidelity mobile app. The business model is transitioning from a tech development phase into a full-scale operating phase. This is a critical distinction for anyone doing self-investing or looking for investment help. In the development phase, you're just burning cash to prove the concept works. In the operating phase, you're actually shipping products and fulfilling backlogs. Ondas is officially in the latter. Their Q4 revenue was over $30 million, which met the high end of their own targets. When a company consistently hits the high end of their guidance, it tells you that management has a firm grip on the supply chain and customer demand. Now, let's look at the macroeconomic pressures. We are in an environment where defense spending is being scrutinized, but autonomous systems are the only area where budgets are actually expanding because they are cost-effective. It's much cheaper to fly a drone for border security than it is to station a manned crew. This is a tailwind that many people using Robinhood stock trading often overlook. They focus on the daily price action and miss the massive legislative shift toward unmanned aerial systems. Comment below how many shares of Ondas Inc. you currently hold, or if you're waiting for it to dip back into the 8 range before you pull the trigger. I'm curious to see if you think the current dilution fears are overblown, or if the 1.2 billion share plan is a legitimate reason to stay on the sidelines. The future outlook for ONDS is heavily tied to their Q1 earnings, which are expected around May 18, 2026. Analysts are looking for a revenue estimate of roughly $40 million and an EPS loss of about 6 cents. If they beat these numbers, the expectation versus reality gap will close fast, and we could see a rapid move back toward that $12 resistance level. On the flip side, if the cash burn hasn't improved as much as the market hopes, we might see a test of the $8.50 support. Wall Street analysts from firms like Needham and H.C. Wainwright are still very bullish, with some price targets reaching as high as $26. That would represent a massive upside from the current $9.73 price.
When you are looking at your intelligent portfolio or checking your Interactive Brokers platform, remember that ONDS is not a stock you trade for a quiet life. It is a high beta play that requires a stomach for volatility. The risk of shareholder dilution is real, but so is the potential for this company to become the backbone of the autonomous defense world. They have the cash runway to survive through 2026 without needing to tack the markets again if they execute properly. In terms of institutional activity, we are seeing more interest in the way they are integrating AI into their drone systems. This isn't just about the hardware, it's about the software that allows these drones to make decisions in real time. This is why you see stocks like Nvidia stock or Apple stock often being mentioned in the same breath as autonomous intelligence, even though they operate on different scales. The synergy between high-end computing and localized drone hardware is the next frontier for online investing. Looking at the broader sector, companies like Rocket Lab and Red Cat Holdings are also seeing increased attention, which suggests a rising tide for the entire autonomous and aerospace industry. If you are using SoFi Active Investing or Fidelity ETFs to get exposure to this space, ONDS is likely one of the more aggressive names in that bucket. The key is to manage your position size so that a 5% drop on a Monday afternoon doesn't derail your entire strategy. To wrap this up, the central insight here is that Ondas is currently being weighed down by technical fears, specifically the share plan and today's price slide, while the fundamental engine is actually revving higher. The expectation is that the stock will struggle under the weight of new shares, but the reality is that their revenue growth and massive cash position provide a safety net that most small-cap tech companies simply don't have. Whether you are using a Robinhood trading platform or a more professional individual brokerage like Interactive Brokers, the play here is watching that $9.50 level. If it holds, the path to the $15 range later this year remains open. The contrast between the retail fear and the institutional strong buy ratings is where the opportunity lies. Most analysts are still sticking to their guns because they see the backlog and they see the governmental demand in the Asia-Pacific region in the Middle East. If Ondas can turn that backlog into recognized revenue over the next 2 quarters, the narrative will shift from how much cash are they burning to how big is this profit margin going to be. That is the moment the stock could truly break out of its current range. Keep a close eye on the volume as we head into the earnings date. High volume on green days will be the signal that the big money is finally done shaking out the weak hands. For those of you managing your own self-investing journey, patience is usually rewarded in names like this, provided the underlying business continues to hit its milestones. Ondas has shown they can hit the numbers. Now they just need to prove to the market that they can do it profitably. End with authority and stay disciplined in your trades.